Wall Street retreating Tuesday afternoon on retail sales and producer price data. Let's take a closer look at inflation as Fed policymakers meet in Washington. We're joined by Jeff Tomasulo. He's CEO of Vespula Capital, and he's coming to us from Wilton, Connecticut. Welcome back and good afternoon, Jeff.
Hey, Frank.
Jeff, producer prices rising 0.8% in April, last month rather, 6.6% on an annual basis, the most since 2010. Inflation here to stay, despite what the Fed insists is transitory. What's your view?
Well, all I have to say is the Fed better be right, because if they're not, we're going to have a nice sell-off in the market, and it's going to disrupt the market tremendously, because you do have this group thinking out there that it is transitory. And, I think 74% of, fund managers out there believe that it is. So I just hope they're right, because if not, again, I think, one of the problems that we face going forward is, the fact that asset classes have gotten a little ahead of themselves. If you look at on a valuation perspective. And I think that is where people are starting to, lose sight of.
Well, Jeff, we got rising prices, but then slowing spending on retail. We got that figure today. So what's the fine line in considering these latest stats the Fed has to walk when it gives its decision tomorrow?
Well, this is the hardest part, right? It is. I think the Fed has gone on too long by not tightening rates, right? I think I'm probably, in the camp where, they have to cut this off sooner or later, and they're waiting. And I understand what they're doing, right? They're waiting to hopefully that the economy will catch up, but they're creating these asset bubbles. I mean, you look around and you look at gas prices, right? And now I know they're saying, hey, it's because we've been in a pandemic demand. If that doesn't curtail in the next few quarters, again, what happens, right? And it is, and I understand they're in a catch-22 here but I would rather side on the fact that, hey, we'd rather rein in these asset bubbles, and we saw it, right?
So, Jeff, you're saying the Fed may have waited too long. What's the best way to play this current tug of war between cyclical stocks and growth stocks? We've seen growth come back over the past few weeks as Treasury yields stay in a tight trading range, often below 1.5%.
Right, and you've seen that. You've seen the yields fall over the last few weeks, and that's a sign to me that the bond market is not happy with what's going on, and and they're concerned of the overall market in general. But going forward, I think you just have to be careful, like you should be, right? You should be watching where your stocks you feel like there's some froth in your overall portfolio, and look to the fact of like, hey. Airbnb is one of those, stocks, reopening stocks that have been beaten down, right? When you look at the Russell 2000, right, that has performed really well towards the end of last year, but hasn't performed at all from the beginning of this year. Now, will that start to, come about and start to rise? One of the things that I would say about growth stocks that no one is really talking about is keeping watching the interest rates, right? That's one of the biggest things I think you can go forward that might tip the hat of saying, hey, growth stocks might end here if we start to see the rise in yields again. So that's one of the things that we're keeping our eyes on, especially when it comes to growth stocks.
All right. So as of right now, would you take a barbell approach? What would you do with growth stocks versus value?
Well, I would actually start to get out of growth stocks right now and start to put my money into the Russell and the cyclical stocks. But with this as a caveat right now, what comes out of the Fed tomorrow, I think is going to be really important. And you see a lot of headlines come out yesterday with Paul Tudor Jones, who is one of the famous hedge fund managers, very concerned about inflation and believes the Fed needs to act. And he actually called it one of the most important meetings of the history of the Fed in the recent times. Which is, that's coming from someone who's traded for 30 something years. So I think tomorrow is going to be a key and critical moment for the market to see how the market reacts. So I wouldn't do anything until we get the information and data out of the Fed tomorrow, and then see how the market reacts, because no matter what people feel, it is price and volume that is the end of the day of what's going to tell you where the market and how the market is thinking.
So don't make a move until after that we hear from the Fed tomorrow. Thank you, Jeff, for that advice. Our thanks to Jeff Tomasulo of Vespula Capital. I'm Fred Katayama in New York. This is Reuters.